All right. So we all set up on that front. What just happened over there? Hey, today does not want to. Okay, let's not try that again. Okay. All right, so the reason why I want us to do this 6.2 is it's the general ledger recording of your manufacturing company, okay? So we'll see how far we get with this. I think we can finish it. Okay. Right, then, so we won't be able to do anything after that. Okay. Right, and I think once we just go through it once together, we should be fine with this here. Okay, right. Now, so let's go through the question and see what they actually want from us. In my book, it's page 169. Just look for question 6.2. Question 6.2. Okay. Are we there? All right, great. Under the required, it says prepare the following accounts in the general ledger, all right, for the year ended 30 September 2009. Okay, so they want us to do the direct materials, they want us to do factory overhead costs, they want us to do work in progress, they want us to do finished goods, they want us to do indirect materials, they want us to do cost of sales, and then they want us to do the trading account. Now, I don't know why they didn't write it in there as well, but I saw when I looked at the answers after doing the exercise, I saw they also wanted us to do the profit and loss account, which is fine. It's not hard at all. So we'll also just get that done. Now, what's important here is understanding to which account these accounts that we have to do are closed off to. Okay? So for instance, and I want you guys to just write this down in pencil in your books. So direct materials, all right, maybe I'll actually even do it here. All right, is closed off to work in progress. Okay? And you'll see why that's important. Work in progress is closed off to work in progress is closed off to finished goods. All right? And then let's do this just to make it neat. And then let's scroll down and see what account we finished. Goods is closed off to cost of sales. I'm just going to put COS. We're doing exercise question 6.2. Yes, 6.2. All right, indirect materials is closed off to manufacturing overhead account. Awesome. What's that? Work in progress is closed off to finished goods. And then finished goods, cost of sales account. And then indirect materials, sorry, this is just balanced. Indirect materials is just balanced, not necessarily. All right. In other words, there we do balance, brought down, balance, carried down, and so forth, so forth. Okay. Then manufacturing overhead or factory overhead costs is also closed off then to work in progress. Sorry. that in. Cost of sales, this we close off to the trading account. Some of you may recall that from your accounting 1A. And then finally your trading account, or your, I said trading inventory here, but it's supposed to be trading account. Is closed off to your profit and loss. There's my answer. Okay. And anybody want to tell me to what we close off profit and loss? From your accounting last year? This is closed off to capital. Remember, if we've made a profit, it's going to increase our profit. It's going to increase our capital. If we've made a loss, it's going to decrease our capital in the business. Yeah, just double checking that to ensure I'm not telling lies. Okay, so we now know what is required. Now we can go through the question. Okay, it says the following information, all right, relates to Ballesteros International, a local manufacturer. Okay, then they've given us the balances there. It's the balances for direct material, work in progress, finished goods, and indirect materials. Can you see there? We have the balance for 30 September 2009, which is the end of our financial year. And then we have the balances for 1 October 2008, which is the first day of our financial year. So in other words, 1 October 2008 is the opening balances for these accounts, okay? And then 30 September 2009, that's your closing balance, all right? Your balance brought down, all right, for those accounts, okay? Then, after that, they say transaction totals for the year end 30 September 2009, okay? So we have credit purchases of raw materials, okay? Now, somebody tell me which account should that go to? Because I think the easiest way to deal with a question like this is to actually allocate where these amounts should go. Once you've allocated where these amounts should go, then when you begin to do each account, you know, okay, this amount is supposed to be included in this account. So where should credit purchases of raw materials go? Direct materials, 100%. So what I did is that I put a dash and then I put DM for direct materials. All right, and then obviously this is going to be a debit in direct materials, okay? Remember, direct materials is an asset, okay? It's an asset to us. Then we go to railage on raw materials purchased on credit. Again, this is going to go to direct materials. All right, we're going to debit that. And then we go to the next one, raw materials issued to the factory. Raw materials issued to the factory. Where is that going to go? 100%. So here they've called it factory overhead costs, but it's the same as manufacturing overhead. Okay? You'd use those accounts interchangeably. They mean the same thing. Okay? Then we go to the next one. We have wages now. But we have direct labor and we have indirect labor. Now the direct labor is going to go to work in progress. Okay? But the indirect labor is going to go to manufacturing overheads. Remember what we said about manufacturing overheads? All indirect costs that are not directly associated to the actual production of if we're producing tables. So in other words, if it's not the wood, if it's not the labor that goes into making the table, and so forth, then that's an associated cost. It's not a direct, and therefore it's indirect, and indirect goes to your manufacturing overheads. Okay? Then we go to electricity, factory, paid in cash. All right, factory, that's going to go to your manufacturing overhead account. All right, or your factory overhead costs. And then administrative offices, all right, that's going to go to your profit and loss. Okay, because that has got nothing to do with it's not even indirect. Then we go to the maintenance, factory. All right, again, manufacturing overhead. Then administrative offices, all right, that's your profit and loss. Okay, all of these are debits, by the way, in these specific accounts. Then you've got your factory for insurance, manufacturing overhead, then administrative offices, that's going to go to your profit and loss account. Okay, then we go to distribution costs. Distribution costs, that's going to go to your profit and loss. All right, advertising, also profit and loss. Salaries of administrative staff, profit and loss. Okay, and then sales of finished products. Okay, so here again, they are assuming you remember your knowledge from accounting. Okay, so you remember in the trading account. Remember the trading account is what we use in the year-end procedures to calculate your gross profit or gross loss. In that trading account, we use sales, all right, we credit sales, all right, and then we debit cost of sales, and then the difference between the two will either give us our gross profit or gross loss. Okay, so this sales of finished goods is going to go to the trading account. Okay, it's going to be a credit there. And then the next line, we have sales returns of finished products. Okay, sales returns, that's going to be a deduction off of the previous amount, which is your sales amount, because remember it's sales returns. Okay, so we thought that we sold initially for 631,800. Then they told us, oh, but we actually also had sales returns. So we then need to deduct that from your sales, just in case you're trying to make sense of it. Okay, so that's also the trading account. Then we go to cash purchases of indirect material. Moment you see indirect, you know which account? Well, okay, in this case, since it's indirect material, that's going to go to your indirect material account. Okay, but then we have indirect materials issued to the factory. Okay, this is now going to go to your manufacturing overhead. Okay, then we have rent expense, factory, paid in cash, again, manufacturing overhead account. Then we have rent expense, administrative building. Okay, that's going to go to your profit and loss. Okay, and then we have depreciation on factory, machinery. Which account should that go to? Somebody tell me. Depreciation on factory, machinery. I think you actually said the right answer. Just with this mask, you can't get anything. Factory, we see factory there, so where should it go? Where have we been putting everything where we see factory? Manufacturing overhead, okay? Then the last one there, cost of sales of finished goods. That's going to go to your trading account, okay? Remember we said we use cost of sales in order to calculate our gross profit in the trading account. So once you have done that, now we can then jump into these accounts. and calculate. So let's do that. Let's go up to the first one. The first one was direct material. Okay. I seem to have complicated my life here. Just give me a second. Okay, so I also need to look at the screen because it's not displaying what you guys can see. Before I actually start letting you guys. Right, so we're now in direct materials. And literally all we need to do is then enter in wherever we had direct materials. But the first thing that we want to do, the best point of departure, is to start with the balance. Okay, so we know that the balances were provided to us for the 1st of March. Okay, so 103, what year was this? 2008, yes. 20. Okay. Right, then here we're just going to put balance. Okay, and this is going to be B, where it should be. And then what was the balance amount there? The opening balance for direct materials. Yep, it's that 42,816. Okay, done. All right. Now that we've plugged in the opening balance, now we need to go and look and see what other direct materials amounts did we have. Where did we write direct materials? Sorry, say it again. Railage on raw materials. So here, let's start there on okay, and that amount there was how much again? 11,289. Okay. Then we had purchases. So here in your answers, I see they've actually written. They said trade payables. Okay. So typically, I would have. I actually would have said creditors control because that's what you guys were taught last year. To say creditors control. See, they didn't use that. They said here they say trade payables. Okay, but this is the same as okay. I would actually prefer to use creditors control because first year you were only using creditors control, so I don't know why they're now using this. I think they're just going to set you up for confusion by doing so. Okay, and that obviously is affecting your creditors journal. Okay, this was for the month of the 3rd, so they should actually put a 3 there, but they've just put a hashtag. Okay, right, and then here obviously That was for 79,000. I know for a fact we won't have time to do each and every one of these accounts, but I just want to at least show you how you actually go about it. All right, so we've then done that, and then do we have anything else for direct materials account in there? We don't have anything else, okay? So we then total here. What is the total that we get when you add those up? Okay, the date over here is obviously your 30 September 2000, and let me just put 09. Okay, so these are the balances at the end of your financial year. So what is the total that we get here? 133, 530. Okay, we have that there. So we copy that, and we know that we need to have the same amount over here. Okay. Now, again, did they give us a closing balance for this account? They did. Okay. And obviously they didn't highlight to us that the account was a negative balance, so we can assume that it was a positive balance. So this side we can see is obviously the bigger side. All right. So again, all we need to do here is write balance brought down. Sorry, not brought down, but just put a BD here. Okay. And what was the balance there? The closing balance this time? 54,080. 30. Okay, we've got that there. Then we know that over here we're going to have balance carried down as well, because that's the smaller side. And here slash, oh, let me be consistent. Okay, put that 54,030. Now remember what I said, that this account is closed off, so to speak. It's not necessarily being closed off, but we know that the difference goes to work in progress. Because what are we in essence saying? And this is the bit that I'm really just trying to explain to you guys, because if you get this bit, then all the other accounts, as long as you know when to debit, when to credit, you'll be just fine. So what's happening here is we're saying, what was the cost that we incurred in relation to direct materials? Our opening balance, or our opening balance of work of direct materials was that 42,000. Then we went and purchased 79,000 worth of direct materials. Then we also had some railage costs in relation to that. So we put that in there, okay? So the total then is this 133, okay? But during the course of this financial year, all right, we managed to use some of the direct materials for work in progress. So if you think about it, some of the wood, because we spoke about making tables, some of the wood that we purchased, right, actually went into the process of making the tables, all right? And that's what work in progress is all about. So if this was our closing balance of how much wood we have, right, that means the difference between this closing balance and the actual total that we had would then be the amount that actually went into the process of making the tables. Does that make sense? Okay, so that's why I was saying it's kind of like it's closed off too, but it's not really closed off. Okay, so here we're then going to say work in progress. Okay, I see in your answer books though they said work in process. I don't know why they did that. I think today it's quite clear I have quite a few issues with your textbook. All right. So then now we just need to calculate what is the difference there. Okay, let me get this calculator onto your screen so we can do that together. Okay, so let's clear that. So we are saying 133, 530, okay, then minus this closing balance of 54,030 gives us 79. Okay. Okay. And then we paste that in there. Aye. Okay. Technology doesn't want to be my friend. Okay. Can you see now what I'm talking about? Does it make sense? Okay. So that's how we deal with direct materials. Okay. Can I proceed to the next one? Okay. So the work in progress account. All right. We said it gets closed off, so to speak, to your finished goods. So again, we ask ourselves, did we have an opening balance there? Did we have an opening balance? Okay, yes, we did. Yes. Work in progress is a current asset. It's a current asset. Okay. So the amount there. Okay, so here we're going to put BD. And the amount there, what was the opening balance? Work in 928. Thank you very much. Okay, then we ask ourselves the same question again. Which amounts did we allocate to this work in progress? Okay, I can see direct labor. Is there anything else? Can we have direct material somewhere? Okay, raw materials issued to the factory. That should actually be going to work in progress. Okay, I think we might have said manufacturing overhead. Sorry, that was an error. I see that now. Okay, so first things first. Okay, so direct to okay. That's coming from the GJ, and this is 79,500. Okay. And the next one is the direct labor, which was for 66,300. Okay. Again, that's also going to be coming from the general journal. Okay. Do you have anything else? Let's see. Okay. Okay, so there's nothing else. But if we scroll down, and I just want to show you guys now, manufacturing overhead is closed off, so to speak, to the work in progress. Okay, so we haven't calculated how much is actually going to be entered in there, but I'm just going to put in the amount now. Okay, so here you're going to have your, what do they call it here? Let's see what they call it here. So factory Okay, manufacturing overheads. Yeah. Indirect. Sorry, I can't hear you. Let me come. Oh, okay. I'm just gonna put OH. Okay, this again. Okay, and the total there is supposed to be 130, and then how much? 671. Okay, and that's it. All right. So scroll up. We only did direct materials. Remember this. Is that what you're talking about? This, remember, was we calculated that with the calculator. We deducted it from these two. So, yeah. We did. Direct materials was coming from there. I think that it's the same amount there. So maybe they're referring to the exact same thing. I think they're referring to the exact same thing. So another way, we could have even actually skipped actually calculating the balance and then said, because raw materials that was issued to work in progress was that 500, then we could have just plugged it in like that. Makes sense. But I don't see anywhere else. Yeah. So we could have done that. All right. But at least now we know there's two ways to skin a cat, so we can look for that information, or we can actually just calculate it. Okay. Right. So again, those are all the amounts that we have. So we want to add up all of this, and somebody tell me what do we get when we add up all of that? All right, so we get, let me just go one down, 288,399. Okay, and we know we have to plug this in on the other side as well. 399. Okay, now that we've done that, is there a closing balance on this account? There is, right? What's our closing balance? Sorry. Okay, so we said 18,363. Okay, and we know that that's also going to be our balance carried down. 18,363. Okay, right. And balance. I'll give you guys a break after this. Okay. And again, we know that this account is closed off to finished goods. Okay, so literally all we do there is then write finished goods. Okay, DJ, and then what is the difference between those amounts? Again, you already have it. Huh? You? Oh, you erased it. Okay. Can we calculate this? Then I attend to your question. How much? Okay. 270 and 36. Okay. 036. Okay. Yes, you wanted to ask. Yes. So you're asking about how did we get the 130,671? So again, we didn't get that out of your textbook, right? The amount is not there. Okay. How we got that is literally I was looking at your answers. But this amount, let me actually highlight it for those who may be viewing this online at a later point. This amount is the double entry amount that we're supposed to collect from your manufacturing overhead account. Because remember, this account gets closed off to work in progress. So that amount that we, like we've been doing over here, if we look under this account, we said it gets closed off to finished goods. So once we do that with manufacturing overheads, that gets closed off to work in progress. That 130 will come from there, going into there. I just wanted to do it so we can complete that actual account. Okay, makes sense, huh? Okay, perfect. Right. So this is typically how you obviously do these accounts, and we just keep on doing the same thing over and over again. Okay. But let me give you guys your break, and then when we get back, we'll just have a look at the answers on the screen there, and then I'll probably give you guys one or two ice tasks, and then that'll be it for today. Okay. Okay, so let's get